If you're looking at buying a single family home in April or May in the Edmonton real estate market, then this video is for you because I'm going to be looking at exactly what's been happening in the single family home market in Edmonton over the last month using the most recent statistics available from the Realtors Association of Edmonton. So we'll be looking at basically the month of March and what's been going on. So make sure to tune into this video. So this is part 2 of 3. On the last video, we looked at the market as a whole. This time we're focusing on single family homes, and the next video, we're going to be looking at condos. And as you can see here, we are in a strong seller's market for single family homes. We're sitting at an absorption rate of 97.91%, which is extremely high, pretty much as far as you can go into a seller's market without getting to 100% or more absorption rate. You can see it as of March 2022, we had 1,341 single family listings in Edmonton, and we had 1,313 listings that were sold in March. And that's actually how you calculate that 97.91%. That's 1,313 is 97.91% of the 1,341. So why does this matter? Obviously, it says that there's still some more homes than there are that are being sold. So how come that makes it so crazy in such a seller's market? Well, it's because even though we still have a few more properties than what's being sold as active inventory, stuff is moving very quickly, and there's not really much time for people to act before they have to buy, or they're competing with a lot of other buyers. And looking at the 13-month history can really put it into perspective. If you look at last year, we were sitting at a 42% absorption rate in March, and then a 43% in April, and it was actually pretty hot last year with an absorption rate like that, and now we're more than doubling that number. So you can see how that would have a really big shift. And it did dip last year after May. It kind of dipped down getting into the summer months, and then it started to go up again in the fall a little bit, and then it really shot up in February when we went to 74% absorption rate, which was a very strong seller's market, and then we've gone even higher in March. We're sitting at an average price of $508,289, which is up only 1.28% from February, but it's up almost 8% from March of last year. So even though we're still seeing a very strong seller's market, we didn't see as much of a jump in average prices. So inventory is coming on the market, it's moving really quickly. We're not really building up inventory that much. So it's sort of surprising that the prices haven't jumped quite as much as they did in February. That tells me that it's not quite as intense as it was before. I can tell you it's still pretty intense in the single family home market. Anytime something nice comes up, you pretty much have to jump on it right away, like in the first day or two max, because it's very common that they'll have multiple offers and it'll often go over list price, depending on how it was listed to begin with. Obviously, how it's priced has a big impact on how many people are going to come through and look at the property. So if something's priced a little bit lower and it looks like a good deal as soon as people see it on the market compared to everything else, those are the properties where you usually have a bit of a frenzy, where it'll be booked back to back for the first few days, and then they'll look at usually multiple offers and it'll go over list price. If somebody prices their property a little bit higher, it's usually not quite as intense, and that does affect how many people you have coming through the property and also how many offers that you get. So it is interesting to me that we jumped up so much in February for our average price, but not as much in March. Now, another thing to mention about the average price is it's not really the perfect metric because it depends on what's selling. So if we have a bunch of expensive properties selling, like over 1 million properties, that'll start to make the average price higher. But if you've got some lower price properties selling, that'll affect the average price as well. So it's not the perfect metric, but it's definitely useful to look at. You can't apply it across the board. You can't say, oh, okay, well, all single family homes only went up 1.28%. That's not really an accurate way to look at it. It's just looking at the single family home market as a whole. So if you have a house that you're looking to buy or sell in the Edmonton area, what the best thing to do is actually reach out to me directly, and then I can give you a little bit more specific advice based on the communities that you're looking at, your price range, as well as your timeline, like when do you actually have to make your move or sell your property. All those things can kind of affect what strategy I'd recommend. So I'd recommend reaching out to me at 780-819-5508. You can either text me or call me, or you can email me at trevor@trevortardif.com, or go to booktrevornow.com, select a time on my calendar, and then I will call you. So let's keep going here into the report. We've looked at the absorption rate. You can see it's hot. Inventory is flying off the shelves. We've had a little bit of price gains. Now let's just look at how this is looking on a yearly basis. So in 2021, the single family homes were up just over 7%, 7.09%. And in 2022, so far, they're up 5.86%. And we've only got the first 3 months of the year so far. So if the current market conditions continue, I do expect that to go up higher as we get further into 2022. Now we're going to look a little bit closer at the active and solds. So this is using some of the same numbers we had before. So at the end of March, we had 1,341 active single family properties for sale in Edmonton, and we had 1,313 sales. So let's see how that compares from the last month and the last year. So our number of active inventory is actually down just slightly from February 2022, 0.15%. So it's basically stayed the same. And that's due to how much sales volume there is, because usually your inventory will start going up as people start to list their properties, but we have so much sales volume that the inventory is not really creeping up that much. Year to year, you can see that our number of active single family properties is down almost 44%. So that's a pretty big dip in inventory compared to last year, which is part of what makes this more of a seller's market. And now if we look at the actual sales volume, you can see that it's up 31.3% from last month. So even though February was crazy, we had even more volume in March, which is normal getting into the spring market. And it's also up about 30% from last year. So even though last year was a strong market, we're selling about 30% more single family homes this time around. So it's pretty intense out there. And you can see this chart, basically the green bar is the gap between the number of active listings and the number of sales. And you can see last year in March, we had just over 1,000 sales and about 2,400 active listings. And now we're sitting at 1,341 active listings and 1,313 sales. So there's that gap is pretty much closed, and that's showing that absorption rate of almost 100%. And you can see that's a huge contrast from what we had last year. Even though the market was healthy last year in March, April, May, it was a very hot market out there last year, but it's nothing compared to what's going on this year. Now, if we look at the average days on market, we've got 27 days on average, which is down 34% compared to February. So stuff's selling faster than it did in February. And it's also down 28.95% compared to March of last year. So you can see last year we hit our low in May of 27 days, whereas last year we were at 38 days average on market. We're already at 27 now, so it'll be interesting to see what happens going into April and May. Now, just looking at the market distribution, this is what price point single families properties are selling. And you can see it's a very small part of the market for single family under 200,000. 1.4% almost, about 7% between 200,000 and 300,000. So it's a pretty small part of the market. There's not going to be a whole lot to look at that's single family in that price range. And then a pretty good chunk of the market, almost 25%, 24.51% between 300,000 and 400,000, and just over 27% between 400,000 and 500,000. Now, we do get a little less than 20% between the 500,000 and 600,000, but that's still a pretty significant chunk of the market. I'm really curious to see if we start to see this shift to the right as properties appreciate and go up in price. It starts to put them into that bracket and increase sales in those higher price points. But between 400,000 and 500,000 is a very hot price point. So that's where you're going to have the most competition. It's the biggest part of the market. And there's a lot of buyers that are looking for stuff in that price range. As soon as you get over 500,000, you are looking at a bit of a smaller chunk of buyers, and over 6, it almost halves again, a little less than half, but like just over 10% of the market is between 600,000 and 700,000. Then you're about 5% of the market between 700,000 and 800,000. Once you get higher from there, you're around 2% or less in each bracket going forward. So obviously, if you're selling a property and you're in those higher brackets, you have to keep that in mind, that even though the market's hot, there's not as many buyers in those price categories. So you're less likely to get as many showings, and you're also less likely to get as many offers and to go into multiple offers. If it's still a really nice property and you've got it priced right, that's sort of the situation that will set it up. So you will get a scenario where you could end up with multiple offers, but what price point you're at has a massive impact on the level of activity you're going to get. Someone pricing their home between $400,000 and $500,000, if it's a nice property, very high chance that you're going to have a lot of people looking through your property as soon as you put it on the market. So be prepared for that. Now, there's a few things I did mention in the last video. We are entering a phase where interest rates have been going up. They've already gone up quite significantly in both the variable rate and the fixed term rate. A lot of people still have their rate holds in place right now from locking in their rate, you know, in the last 30 days or sooner or more recently. So they have that rate hold, which is going to be motivating some more buyers out there to buy a property right now before they lose that rate hold, so that they can get it in at that lower interest rate. So I do think that is one thing that will contribute to some activity here over the next month. And I'll be watching really closely to see sort of how the market starts to shift as interest rates go up. I see so much demand right now, and rising interest rates will reduce that demand, but I don't know how much yet. So we have to kind of wait and see. Real estate doesn't move super quickly, but each month we'll have more data and we'll be able to tell, okay, are our sales volume dropping? Are we having higher inventory? Because honestly, I don't see the market shifting to more of a balanced market until our inventory numbers get up. So we have to have our inventory go up, and we also need our sales volume to go down to have a more balanced market. So if you're sitting on the sidelines trying to decide if you should buy right now, I wouldn't look at it and just assume, you know, prices should start going down like right now because interest rates have been going up, sorry. It doesn't react that quickly. It takes time, and sellers don't just start reducing their prices as soon as interest rates go up. They've seen what stuff is sold for, and they're trying to get the most money that they can for their property. So it takes time for this stuff to play out in the market. Obviously, how much interest rates go up is going to have an impact on the demand as well. And it can even end up causing some people that were going to sell to not sell anymore, which can actually make it the inventory problem not go away either. So if you were considering a move and buying another property, maybe you were going to buy a bigger property, but now your cost of borrowing has gone up. Maybe you decide not to sell your property after all, and that never becomes part of the inventory. So it's not quite as simple as some people try to make it. I know I'm certainly no expert on interest rates and exactly how everything in the market's going to play out. So I'm doing my best to just look at it on a daily basis, on a monthly basis, and see what I see happening in the market right now, and then just sharing that with you guys because I know it can be pretty confusing. There's so many different factors that can affect what happens in the market next month or next year. So we basically just have to see what's happening right now, and if this continues right now, how are things going to look in the future, knowing that it could change obviously if interest rates go up even more or if something else happens. So hopefully that makes a little bit of sense and I didn't make it more confusing. But if you're interested in getting some more sort of direct advice on your situation, then I recommend reaching out to me. You can reach me at 780-819-5508. You can either text me or call me, or you can email me at trevor@trevortardif.com, or go to booktrevornow.com, select a time on my calendar, and I will call you. And again, thanks so much for watching. Make sure to like and subscribe. I'm trying to get to 500 subscribers and I could use your help, and I will see you on the next video. If you'd like this video, you can check out more videos like this in this playlist, or you can subscribe to make sure you never miss another video.